All right, everybody. I think we're recording now. We got some exciting news for you all. This is Eric Hale with Trader Oasis, and I'm also joined by Greg Jensen. What's happening, Greg?
It's a good day to be an investor, at least if you like big, huge, round numbers. We're knocking on the door of S&P 5,000. We're currently at 49.98 while we're recording. We might hit 5,000. Maybe we won't. I don't know. Have you ever seen, what do you think about these big round numbers? Do they
Oh,
mean
there.
anything?
Oh, absolutely, no question about it. Brent Donnelly did a piece he had some fantastic data showing that we hit round numbers. There's no question about it, and people are psychologically sort of attached to those numbers. Let me see if I pull in. I don't. We're still a bit to go. Uh, Looking at that. S&P 500. So we're very close here to hitting that 5,000 number. I expect that it'll be resistance, but once we break through it, it's likely to scream higher. So I'm looking at different places to pull up those charts in real time.
We talked a little bit, you and I, we did a broadcast for those of you who are not part of the options animal community. We did a broadcast on Friday for the options animal community in our OA Weekly, and Eric and I were there together with Karen. And we talked about the driving factors behind the move up in the markets lately. And it really has been strong earnings from a lot of these big tech names. And the Magnificent Seven, Fang, they've had a number of different names recently. I've heard the most recent one they want to change it to is just M&M, meaning Microsoft, Nvidia, and Meta are the three that have been really driving the market higher lately. But it's not just that their valuations are going through the roof either, although they are. Don't get me wrong. There's a lot of euphoria getting priced into these names. But they have earnings and earnings growth behind it. As Meta had really good earnings last week, made a lot of money. Microsoft's earnings were really good the week before. Nvidia just got their price target raised by Morgan Stanley today to 750. I mean, there's a lot of hype. There's a lot of argument that maybe the market is too lopsided, but on the other hand, that's where the revenue is coming from too. That's where the earnings growth is coming from. And so it's hard to say the other 493 need a fair shot and then there's no love for the other 493, but you're not seeing the earnings growth in those other names. In fact, you strip out those 7 big cap tech names primarily, and the S&P's earnings are actually flat to negative this year. So hate on them all you want. You need to put them in your portfolio if you want to be positive right now and participate in this bullish move that's been going on. I don't know. I know you had talked about maybe expanding a little bit, including a little more love instead of just the top 7
Well,
or the top 3.
hopefully we can be live when we hit this 5,000 because we are bouncing right around there. Maybe we will, but looking at this Magnificent Seven, there was a piece that Gary Black shared this morning, judging by market cap. So number one at 3 trillion is Microsoft and Apple, just slightly under 3. Google at 1.8, Amazon 1.7, Nvidia 1.6, Meta 1.1, and Tesla's fallen all the way down here to the 9th place. And what I was mentioning to you is here we have BRK, Berkshire Hathaway, coming in at about $0.9 trillion. This has been a real surprise sort of to me. I mean, Berkshire Hathaway's one of my favorite equities. And here's the most recent chart. It's been on a tear here lately. I actually spent a good portion of time today looking at potential trades. And the reason is I think 2024 is really going to be a year on for stock pickers. And if you want to put your money on a stock picker, who would you pick? I mean, wouldn't Warren Buffett be on the top of the list?
Oh, for sure. You know, he's not just because of his amazing track record for decades of performance, but he's still today, one of the best minds, if not the best mind in the game. So, yeah, for sure, Berkshire Hathaway's been a great place to be invested for the last several years.
Well, for since 1960, whatever.
Yeah.
Uh, it's been a great place to put your money, and he provides those charts that show, if you put in 100,000, where you'd be a multimillionaire. I think the A shares are around 600,000 a share. The B's here trading right around 394. But seriously, if you had to um, consider who the best stock pickers, there's no question Buffett's on the top of the list, and he has been making acquisitions. I mean, we've been seeing the Form 4s or the 13 Fs filings. Oxy's been one of his biggest, but he's also been purchasing other stuff. And he, owns a bunch of companies privately. Earnings is coming up. I think it's the 24th, because I think he does the earnings on the weekend. So I think February 24th is the earnings. And like I said, I was looking at trying to put a trade on today, because I wouldn't mind owning more Berkshire Hathaway in 2024. I actually didn't place a trade on that. I actually placed a trade on something else today. Actually, yesterday I placed a trade on Uber. Did you see Uber today?
I did. Yeah.
I shared this with our community, and did really well today. So it initially opened up lower, but it was fantastic earnings. Uber's doing really, really well. And I think there's another opportunity, a similar opportunity. I'm trading Roblox today as well. I shared that trade with, and earnings is actually tonight or tomorrow morning. So it's been making quite a good move.
Yeah, Roblox up 12.5% today. That's a big move there on that one.
Yeah.
So
Oh
maybe
yeah, I'm sorry. Roblox earnings was this morning, so yeah, 12.5%. I actually, I did a Costanza trade. We can tell people here, if you don't know what the Costanza trade is, go find it in our feed, like and subscribe on YouTube. Yeah, that's right. So Roblox is today. Um, Actually, there's another one that I'm looking at for earnings, which is coming up tomorrow, and that's Pinterest. So I'm considering a trade on that I'll share with people. So I think there's lots of opportunity that's out there right now.
you know a name I like right now, and I talked about this again on Friday in the OA Weekly is Palantir. Have you seen what they've done in the last week? They were at 1650 or so before earnings. They had earnings Monday morning, uh, up huge yesterday,
Wow. Yeah.
having a follow through again
Yeah. You
today.
talked about them on Friday.
I did. I talked about them on Friday as a stock to watch that I shared with the options animal community. So yeah, there's lots of opportunity. It's not just the big eight, the big seven, Big Ten, the Big Ten.
What is
Isn't
it?
the Big Ten dismantling?
What?
No, it's the Big 12.
Everything's
No,
becoming
it's
the
the
Big Ten.
Pac-10. That's what it is.
Everything's becoming the Big Ten.
Everything's coming into the Big Ten and the SEC. It's just too
Listen,
complicated.
I think this is interesting though. So I think folks might want to start taking a look at some of these names down here. Eli Lilly, which is just, we're going to get, we've got a community member who's a medical doctor, specializes in weight loss. And I get a lot of good insight from conversations with him, not only on the technology, but he also knows some of the industry and the players. And I mean, this Eli Lilly has just been on fire. And this is because, was it them or Novo? One of the two, or Eli Lilly acquired a supplier. So Eli Lilly, but I mean, look at this. I think you need to start looking down here at the bottom of this list down here.
Oh,
So
you need to share your screen.
I'm not sharing my screen. Well,
There's
you
just
can't.
you and I's pretty face on the screen right now.
You can read my mind though, can't you?
Well, I
You know what
can.
I'm talking
I,
about here.
yeah.
So here's this chart of Eli Lilly, which is just pretty incredible move there. Here's the chart of Palantir that we were talking about. And here's this top 10 by market cap as of this morning. So you got Berkshire, Eli Lilly, Tesla, and Broadcom here that are all companies I think probably should be on your watch list. You should be taking a look at the due diligence on these. I don't think we're done. I mean, definitely been tech dominance, But looking at some of the metrics, I don't think we're overdone. I think there's room to go on all of these. And I didn't have Microsoft as my top pick for 2024, but if we were doing that today, Microsoft would be my top pick. I think if anybody's gonna be able to monetize AI, there's no question that Microsoft is in the seat to do that.
See, and I would take the other M. Not that I disagree with Microsoft. It was actually one of my top picks for last year for 2023. I had a good year with Microsoft last year, but I think Meta is also another name that I still think it's very, very well positioned to take advantage of AI and the strength of this robust market right now. As long as our liquidity remains there, as long as the Fed doesn't fumble the ball. I'm sorry, I'm fighting my inner bear right now to not want to talk about all the things that could go wrong, because right now it's just we're off to the races, and
You know,
until
it's
the
hard. It's hard not to. One of the things is, this is something I notice, and you and I, we have some friends, and I don't want to mention their name, but we have a particular friend or acquaintance that we've known over the years who has a particularly extremely bearish view and has for 2 years because they have insight into some really messed up stuff. There's some bad stuff that's going on inside the markets, and we got a debt situation. And if you look at commercial loans, and if you look at credit card debt and the housing market, there's a lot of reasons to be bearish. And in some ways, it's almost, I know they get frustrated because it's like, all these people are ignorant. They don't see all this stuff going on. Why is the market going higher? But that's what's happening. Well, even
and
you and I are, go on. Do you
no, I
know
was gonna say, I
do you know
think
who I'm
the
talking
answer to
about?
that,
I don't want to say their name.
I do, I do.
Okay.
I actually, I know there's a couple of people who fit that bill. There's more than one.
Yeah.
But I'm pretty sure I do know.
Yeah. I don't
Um,
want to throw them under the bus. But for example, one of the things, this is a 5-year chart on the Shanghai Stock Exchange. This has been, and there are periods of time when our market lockstep with Shanghai. And I mean, Shanghai is pretty much in a free fall here. The market is just coming right down. This is a 1-year chart. The previous that I was showing was a 5-year chart. I mean, it's just things are getting decimated over there in China, and it seems like there is no coupling whatsoever. And maybe this is the decoupling that we've been talking about, trying to separate our supply chains. Maybe that's what's happening here. I don't know. But China isn't driving the markets anymore like it used to.
40,
And it,
49.99. 40. We might hit it right now while we're talking. Sorry to interrupt. We're
well,
within a point.
that would be awesome. We could have a
We should have hats. No, that's what they do on
that's our
CNBC.
cash in.
Yeah, that's Art Cashin. The fact that there's still so much liquidity in the market, it's what drove the liquidity, the amount of cash, the amount of money that is in people's bank accounts, it's in people's trading accounts, in banks, investors' bank accounts. It's still there. They haven't blown it all. Even though, 2022, or excuse me, 2022 was a bad market, was a bearish market. People didn't get blown out and have massive 100% losses. There were some, but it
Here, you
wasn't.
want me to push it higher? I'll buy some. I'll buy some S&P 500 right now.
I was gonna say, let's go buy some calls on the S&P, see if we can impact some gamma.
Oh crap. Okay. I didn't
No,
I didn't get filled on that. Okay. Yeah.
I think I think as long as there's this amount of liquidity continues to exist in the market, I think the markets continue higher. What the Fed has done in raising interest rates and lowering their balance sheet has not slowed down the market. It has not slowed down the economy. Um, there's debate as to whether it slowed down inflation or not long term. We do know short term it's worked in bringing inflation down. We'll see what happens when they actually refill the strategic petroleum reserve and whether or not we can keep oil prices down where they're at. But in the short term, everything looks great, and that's why the markets are still ripping as long as the liquidity stays there. I've said for a while, keep an eye on the reverse repo amount over at the Federal Reserve Bank of New York. They do a report over there every day of what the reverse repo levels are at. They're still declining pretty rapidly. Not to go into a deep dive in this discussion about what the reverse repo is and how it impacts things. It's just like an excess savings account, to put it into really simple terms. It's extra money that's just sitting there. And that's come down quite rapidly over the last year or so. I think when that gets down to zero, we'll see what the amount of liquidity does, and if there's the ability to chase risk assets like stocks, continue to push them higher. I don't know. But for now, yeah, the big names, you buy the names that are making money, and that's Nvidia, and that's Microsoft, and it's Apple still. Even though Apple's earnings maybe weren't what everyone wanted, I still like Apple. I'm still gonna buy. I am gonna buy a Vision Quest. Or no, what?
AVP,
Yeah, I even called it
Apple
the wrong
Vision
thing.
Pro. Everybody's
Vision
calling it
Pro.
AVP. By the way, I just bought some at the money calls. That was me trying to gig the market higher. So I did get. That's why I was a little distracted. Can you see my screen now? This is
Yeah, the
from
reverse
the
repo.
New
Yeah.
York Fed. So this is really dramatic seeing the reverse repo coming down here. I mean, I'm surprised that it's down around 5.5 billion or 500 half. It's half a trillion.
Half a
Uh,
trillion, yeah.
but we were, pushing the door on 2.5 trillion here just a little while ago. So there's a lot of money coming out of this. This is not the Fed balance sheet. This is the reverse repo market. This is because people have too much money, not people, banks have too much money on their hands. So they give it to the Fed to earn interest on it overnight. So this is the reverse repo. And this is one indication of liquidity. Greg and I have had conversations where we talked with Paul McCulley when we were out at Jackson Hole a couple years ago. And there's no reason to be concerned about liquidity until this goes to zero. That's not necessarily meaning that we're going to have a liquidity problem then, but we definitely will not have a liquidity problem until this gets to zero.
Right. Right. And I still think even beyond that, you still have all of the Fed's balance sheet situation that they could stop liquidating there. Yeah, there's a lot of other things the Fed can still do to make sure there's not a liquidity crisis. But I think that's the only thing that really can put a big damper on the markets. That or a respike in inflation. I think those are two things that could cause the markets to slow down. Otherwise, I think the opportunity, there's lots of opportunity. And a lot of the names that we've talked about and a lot of other ones. I think another one that's had an amazing run recently has been Netflix.
Hey, I don't want to catch you off guard, but did you read the Grant's Interest Rate Observer this week?
I did actually, at least part of it, and then I fell asleep because I've been fighting.
That's what I told you.
I know you did, and I was
Grant's
like,
usually puts me to sleep. But the first article I think was really worth reading.
Yeah.
Because there's a sort of a philosophical debate about what causes inflation, and there is no agreement on what is the cause of inflation. And I mean, what is the cause? What causes it? And we don't really know. So if you don't know what causes it, how can you control it?
I think that in my opinion, and again, I'll just throw my opinion in here. I don't think the Fed can really control inflation. I don't. I think inflation is controlled by the fiscal spending patterns of our government. Not only on how they spend money with the deficit that they create and spend it in the different places they do in healthcare and public works and monetizing whatever program they're working on at the time, defense budgets, those types of things. But then obviously what they did with COVID when they printed money and put it into people's bank accounts, that to me is a definite way of driving inflation higher. I don't know how they could stop inflation outside of balancing the budget.
I'm a big fan of Milton Friedman, who says it's money supply. And
Yeah.
if the more money supply, the more inflation. As simple as that. And we
Yeah.
definitely have seen, high money supply. And the truth is you got more money it's as simple as this: more money chasing the same amount of products. Prices have to go up. So I mean, that's Milton Friedman's approach. But I know that there's room for debate and there's subtlety, and you can come up with exceptions. The key is we do have an inflation problem, and inflation isn't under control. And the indications are that we still have a ways to go, despite what people want to believe. There'll be interesting discussions with. We'll talk about this. I think you won't be there
I
next
won't
week.
be there. I'm actually
Now,
really regretting my decision. I'm not regretting my decision
I
to
know
not
that.
go. I needed to be with my family, rather than go to the Bahamas where it's going to be nice and warm. You're going. That's next week, right?
Oh, we were talking about dominance. Let me go back. You were referencing this heat map earlier, and I mentioned there's the big top 10. This is Finviz, and so the size of the squares is related to the market cap. And so we can see the Microsoft, Nvidia, Google, Meta, Eli Lilly, Berkshire Hathaway, Tesla, Amazon. You can see the big ones in there.
Who was top 10 again? Who's the 10? Was it Broadcom again?
Yeah,
Yeah,
Broadcom.
Broadcom.
Yeah. So a lot of dominance, a lot of green, a lot of big green blocks here, there. But that's and then we mentioned the Fed. We talked a little about reverse repo. I just showing that I guess we're now at a little bit better than a 50% rate cut in June, but it looks like May is off. A rate cut is actually, there's a 54% chance of rate cut because we're at right now at 525, 550. So March is off the table. So that's not off the table. It's 81% chance, 81.5%. This changes. I don't, I'm glad I'm not going to eat a shoe in March.
Yeah.
Well, that's the way it looks. Things could change. I did want to pivot a little bit and not talk too much about this because we're gonna definitely spend some more time. But are you ready to enter the danger zone?
Yeah.
Okay.
Just like Kenny Loggins, Danger Zone, like Tom Cruise, Top Gun,
Yeah,
Danger
for
Zone.
sure. Well, before we go there, let's talk about something that's not so controversial. This is a leap year. So February 29th. I asked my friend ChatGPT to tell me what happens in leap years, and February's with leap years have an average positive return of 1.39 versus non-leap years of 0.44. If you look at the actual day average return is 0.11, and mostly because we had this really bad day, this like 3.5% down day on February 29th, 1976. If you took that one out, our day, I don't know that this means anything. It's kind of weird when you got these weird days. I think they catch people off guard. Diane, I was talking with Diane. I said, it's a leap year. She's like, oh, I didn't even know that. So kind of weird. We got a February 29th. Any thoughts on that or anything tradable?
I
No, I didn't think so. Yeah.
no. I had friends who were twins who were born on leap year.
So they're like 4 now or something.
Yeah. That's nice. You saying I'm
Every
60.
4 years. So if you see a spreadsheet for me, I usually sometimes 365.25. So there's not 365 days in a year. There's actually 365 and a quarter days.
Yeah.
All right, so let's pivot to politics and let's start by talking about who won? My favorite candidate won the Nevada primary. Did you see that?
Oh, that Clayton Kershaw.
No, none of the
Oh,
above.
oh, that's what I'm saying. Maybe it was Clayton Kurt. No, Nevada. None of these
Nevada,
candidates.
the candidate who won the primary is none of these candidates. So I know
Yeah,
that everybody's um sort of dreading. I think is that the right term? Are you? I am dreading election season.
I am too. I think we already know who the two candidates are going to be. At least I assume we know.
We have
Um,
pretty good idea.
it's a pretty good idea. And it's like, do we really have to wait until November? I guess
Yeah,
we do because technically President Biden was elected for a 4-year term, and he needs to be able to finish his 4-year term out. And we can't have the elections now. Could we pass some type of bill or agreement that you can't talk about the presidential election before Labor Day?
What
Think we can
are
pull
you
that
talking
up?
about, us or everybody?
Yeah, everybody, you and I,
Yeah.
no.
Yeah. Well, I mean,
Yeah,
you're starting to read it. There's a lot of analysts. There are a couple of reports I read this morning talking about it. What the impact is. So there's very real impact on the markets due to politics. I'm a big fan of Ken Fisher. We happen to have a Ken Fisher book right here on my desk. So Ken talks about four factors that move the market and fundamentals and sentiment, but one of them is politics. And it is I think it's naive of people to say that politics does not have an impact on the market. It absolutely does, because there's policy. What I have experienced, because I've been studying this for close to 20 years, looking at the impact of presidential elections. My conclusion is that it's never positive to have a change. And so this is not a Republican or a Democrat thing. It's a change thing. And if we get a significant change in presidency, that's anticipated by the market. And that's the caveat, because there was an exception in 2016. Here's a chart of the probabilities of who was going to win this. So the yellow line is a Democrat and the black line is a Republican, and the Republican ended up winning. And the odds didn't shift until the very last day of the election. It looked like it was people were already hanging banners and planning parades because it looked like the Democrat was going to win. And we had a strong market, and the market seemed to be okay with that, because we were transitioning from one Democrat to another Democrat without a ton of upset. And if we go back to the previous election, 2012, again, a Democrat was likely to win, and that's of course what happened. Going back even further, though, another Democrat. We could go back to the 04 and the 2000 elections, but this is without getting controversial. I'm going to get controversial here. So this is the actual probability. The blue line is the probability of a Democrat winning the White House, and the black line is the S&P 500 over time. And they look like mirror images of each other. And before anybody takes a victory lap of my team won, hold your horses until we go a little deeper on this. But there was a if you look at the R squared correlation on this, it was a negative 89.3 correlation. That is it. There are very few things that are correlated on the order of 90%. That's a 90% inverse correlation for this period of time. It is you can say with a very high degree of confidence, these two things are related. And if you do what's called a Granger bivariate causal analysis, this determines what causes what. It actually doesn't tell you that one causes the other, but you can say one did not cause the other. So what you can say is the S&P 500 going down happened after the probability of a Democrat winning in 2008. There was a lag. The market moved after. Now, you can't say that the probability caused it, but you can 100% say the market going down did not cause the probability to go up. And that's an argument. People say, well, the market was going down and that made the likelihood of a Democrat winning. You can say that's not true. Now, so this is not a Republican or a Democrat thing, because if you fast forward and go to the next election, it was a inverse correlation. Democrat winning had a positive R squared correlation of 69. So here, a Democrat winning, what's the difference between these? The difference is a change in party. It is not a Republican thing or a Democrat thing. It is a change in party and a change in policy that matters. If we get a dramatic change in policy, the market, there may be good things, there may be bad things, but most of the time it's going to be bad for the market until it shakes out. And it will be priced into the market months before the election happens. The
And,
market will take this probability way before it happens.
and to put some color onto that, to go back to the kind of the some of the things about the market as investors, as big investors, not just us individual guys that are, managing our own portfolios or managing small portfolios for clients. But I'm talking the big guys, the Vanguards of the world,
Yeah.
the Black Rocks of the world,
Yeah, Ken
the
Fishers.
Can Fish that are managing hundreds of billions,
Yes.
trillions of dollars in assets under management.
Yeah.
They want the biggest thing they don't want is uncertainty.
Right.
They want to know, because they're making big decisions on big amounts of money. They want to know that their policies that they deal with, whether it's due to taxation, whether it's how capital gains are treated, whether it's investment um, allocations that may happen with certain presidencies versus others, and then how the political leanings may go one way or the other. Those are the things that these big, huge investment houses look at. And it's not that again, we're not being political here. We're not saying that I liked Barack Obama better than John McCain at the
Right.
time. And that's why the market, or no, it would have been the other way around, because that was the McCain
Yeah.
Obama was 2008.
Right.
Whereas, the market liked Obama instead of Mitt Romney in 2012.
Right.
Those are the two correlations you're showing.
Right.
And so don't look at it that right now of the market likes Joe Biden and dislikes Donald Trump. What the market likes is it likes the same. It likes steady. And whenever there's a potential for change and uncertainty, that's when the markets have a tendency to get volatile. And that's why we as investors, I know sometimes it's hard to listen to us talk about politics. And because you're invested in your beliefs about politics and what one candidate may have versus another. And if we say something that maybe rubs you the wrong way, I'm sorry, that's not what we're trying to do. What we try to do, and why we look at politics, and why we have to, as an investor, pay attention to politics, is it will impact the S&P 500.
Yeah. So
Um,
listen, if anything we've said has caused you to become upset, you're taking this the wrong way, because Greg and I are going at length to not express our personal opinions about what we want to see happen in the election, because I can only cast one vote. But I'd rather be objective and look at what's happening in the market, because you know what, it gives you an edge. So whether you like what we hear or not, save that for social media, save that someplace. Well, I mean, want to share it with us, great, that's fine, right? But we're not going to stop doing this, because enough of you appreciate what we do here and sharing this. And I'll show you a source right now, and it's still a little early to look at this, but I have been using the University of Iowa Tippy College data for a long time, and they have a long history of data that's backed by economics and research. They have had these markets for a while, and they do a very good job of forecasting outcomes. And we could talk about where this comes from, but right now the picture is with a Democrat is got a 71% probability of winning the election. Now we're still pretty early. This is February, right? So a lot can change. And if we, go look at, so this would be right around here. This is the 2008 data, and this is the 2012 data. So we've got a lot that can happen, and things can change. And then here's the 2016, which it didn't get it right. So things will change, and we need to keep an eye on. But my point is that these changes will could affect the markets. I don't know. We need to keep an eye on it. And like I said, it could be an advantage for you to be in tune to this stuff, and save your thoughts and opinions for where you donate your money and what you post on social media. We're just trying to help out here. Now, I do think I'm going to say overall, I think this year is a little bit unique. And actually, this came from Ken Fisher. I heard him speak a few months ago that he doesn't think it matters which way the president goes, because the market already knows both presidents, both candidates. So from a market standpoint, there's an argument that this year we might not see an effect. depending on which way it goes, because everybody understands both presidencies.
I think I could probably agree with that, assuming that, I'm making the assumption that we're both making the assumption that President Trump, former President Trump, gets the nod for the Republican ticket, and that his policies will be the same as they were in his previous administration, which they probably will be. I think that's a pretty safe assumption. The unknown would be is if he comes and surrounds himself with a completely different set of people. If he does, in fact, remove Jerome Powell as the Fed chair, the president of the Federal Reserve. Those are the types of things that could have an impact if President Trump were to get the election, if he were to win the election in November. I think the biggest one is surrounding Jerome Powell. We'll see. I know Jay Powell has been very instrumental of threading this needle that the market has needed to not panic about our inflation situation we've dealt with over the last couple of years, the amount of debt that you're talking about, navigating this quote unquote soft landing that we're trying to have right now with a slowdown, commercial real estate, all those things, the bank failures that have happened this last year, even just this last week, right? We've got more bank failures going on. I think Jay Powell's been pretty instrumental in that. So I think that's one maybe risk of a Republican getting elected, is the removal of Jay Powell in favor of Chris Waller.
Now I won't. Well,
I
Waller's
like Chris Waller, but
yeah, I'd hope so, but no, it would probably be Goolsby.
yeah.
Yeah, somebody like that. I don't think Biden's gonna. I think Biden, the wild card there is Biden will let Powell ride out his term, and I think it's up in 25 or 26. I think that it's more likely that Trump being coming in and doing something. But it's bigger than just the president, because what matters also is the White House, or the is Congress. And so this is a line of the different outcomes, whether the Republicans win the House or the Democrats win the House versus in the Senate. And this is still a little early to tell, but right now the highest probability is the Republicans controlling the House and the Republicans controlling the Senate, which from us market, that gives us what, Greg? What do we get in DC when we have president having the presidency and then the other party having Congress?
The market loves that. We get deadlocked.
We
We
get
get
deadlocked.
we
Yeah.
which means the government can't mess things up.
The government doesn't mess things up. So this is and this might be what's moving the market right now. I mean, why is the market so bullish? Is that the market's looking out. At least there are some people that arguably, some of these people that are managing money say, well, this is going to be good. Even if Biden holds the White House, and we've got Republicans controlling the House and the Senate, nothing's going to change. So everything's good. From the stock market standpoint, I mean, I don't think it's the right answer for the country, but from the stock market, it certainly that's if a Democrat wins the White House, from the market standpoint, it's probably the best outcome is having Republicans in the House and the Senate.
Well, we'll continue to give our opinions of how this is going to impact markets. We could sit and conjecture for a while longer, but we've got a lot of time between now and then. And in the meantime, we got a print of 49.99.89. We got within 0.11 of 5,000, but we
Market's
didn't
not
make it.
closed yet.
I know it's not closed yet. We still got 30 minutes, but maybe we get it by the end of the day. Maybe we don't. I don't know if they want to sit and listen to us talk for 30 more minutes. Hoping
No,
we
we're not
get
going to sit and talk for
5,000.
30 minutes, but how you feeling? You sound a little better now that your voice is wound up.
I'm okay. I'm okay. Okay. I've been fighting a cold. Those of you who didn't catch that before, maybe you can hear it, but I'm on the back end of a cold that I had this weekend.
So last week, actually yesterday, I'm sorry. Yesterday, I'll tell you I'm gonna go with TMI here. Greg's like, oh, where's this going?
Uh-oh.
You know what ketosis is, right? So have you
Oh,
ever
yeah, yeah.
the keto diet? So your body can burn ketones. So one of the ways you can help that is you can take like MCT coconut oil. Have you ever done this?
I've used coconut oil. I love coconut oil in
Like for
cooking.
cooking and stuff. But no, you
Yeah.
can actually put this in, like a lot of people do bulletproof. I know you don't drink coffee, but bulletproof coffee where they put butter and MCT oil in it together.
Oh, okay.
And you helps your body get into ketosis if you don't have carbohydrates. So I had a MCT protein shake for lunch. And then I ordered from Amazon these exogenous ketones. Have you heard of this?
No.
So these are not cheap. They're like $5 a serving, but it's something you drink and it tastes like nail polish remover. Literally. It's actually in the acetone family. So that's pretty close to what it tastes like. But it gives you another form of energy so yesterday I wanted to ride the bike and I had a hard ride. So I took some of this stuff, I came from Amazon, tore the package open, took a shot, and I read it. And it says, don't take with MCT oil. Well, 2 hours before, I had taken a protein shake with a squirt of MCT oil. I'm like, oh, well, too late. I found out why, because later that night, I did my own rendition of the Dumb and Dumber scene.
That's
You
great.
know what scene I'm
I
talking
know
about.
exactly what you're talking about.
My wife was like, are you okay? Like, oh boy, I felt like I was doing a colonoscopy prep. It was unbelievable.
Uh,
Oh, too much information, I know. So
TMI. We
the
apologize.
exogenous
Get it?
ketones are awesome because they give
All
you
right.
it's almost like and it's like a caffeine buzz. You get
Huh.
and your
I'll have to look at it.
energy. It's good stuff. And
Probably says don't drink it on the back end of having a rock star either, right?
yeah, well, that's what one of the reviews I read is don't drink coffee when you drink this together because yeah, but it's pretty interesting. So I'm trying to.
Okay, well, I have to share one more piece of swag before we leave. I'm jealous. Sometimes you'll pull these little swag things up. So I'm gonna just do a little shout out to next time you're in Idaho,
Okay.
Idaho Falls. This is the coolest fly shop you'll find
Jimmy's
anywhere.
Fly Shop, Idaho.
Jimmy's Fly
This
Shop there in
episode
Idaho Falls.
of the Everyday
This
Guy
episode
brought to
brought
you
to
by
you by
Jimmy's
Jimmy's
Fly
Fly
Shop.
Shop. No, they're actually a couple of buddies of mine that I got a little piece of swag and I'm like, hey, I'm going to show this on my podcast.
Do they make nice flies?
They have amazing flies, great fishing reports, best fly shop in Eastern Idaho. They do all if you're ever going to go into like Wyoming and fish the South Fork of the Snake or Idaho, the South Fork of the Snake there, up around Yellowstone Park. So when you come out here for vacation next summer,
Well,
'cause
no,
that's
go
the
visit the
time,
home office in Sheridan.
yeah, yeah. When you come out here
Are
to
you
visit,
fishing already?
I'm not. I would. I'm sick.
Oh,
No, this is actually the time of year when it actually starts to pick up fishing wise.
really?
Yeah, the bugs are starting to wake up.
Well, we'll have to check it out. Maybe you'll come out for that for a meeting or something to get together. Also, hey, just a personal note is I bought some Wagyu grass-fed beef from a ranch in Wyoming that came. I got 38 pounds of this stuff. Pretty amazing.
Nice.
I share the name with you. They had buy one, get one free. I got all like 38 pounds of beef. My wife's like, what are you doing? So try these burgers. They're fantastic. So I got some briskets, I got some roasts, some other good
Well,
stuff.
let's schedule our next. Do we want to do another one of these? You want to try to hook up while you're in the Bahamas? I guess you won't know your schedule yet.
I think my schedule is going to be pretty tight because I get invited to two private roundtable things.
Okay.
So
Well,
I don't think I have any time,
we'll do another one of these after you get back then,
or maybe right before.
or maybe right before you go. That's right. It's not
Yeah.
until
So
next
I'm
week.
leaving on the 14th, so I'll be back
Okay.
on the 17th.
Let's do one before you leave.
Cool. How are we doing
Okay.
on the S&P 500? Oh, it's coming down a little bit. Oh,
That was our high.
49.96 at 35. So just so close to that 5,000. We came within 43 cents so far. We'll see. Could get a push. We'll probably get a push to the end.
Yeah.
Often happens
might.
with this big ramp up into the end. So
Yep.
I bought a bunch of calls. So hopefully that moves the market. The market makers will have to.
There you go.
Been good seeing you, Greg.
Good to see you too. Thanks
Thanks,
everybody.
everybody.
We'll see y'all at
Talk
the
to you
next
later.
one.